There's too much money out there, too much currency out there, and not enough gold. There's going to be a moment where the markets get spooked, investors get spooked, and they flood into gold en masse, and the gold's not going to be there to deliver. And once there's a failure to deliver, that is outright well, let me just back up and say that if a contract cannot perform, the value of that contract is zero. And a failure to deliver will completely expose if you want to call it fractional reserve, if you want to call it Ponzi, whatever you want to call it, it's going to expose the fraudulent nature of the markets.
Gold is getting a big boost from Chinese investors once again, and mainland demand is helping to push the yellow metal closer to last month's all-time highs as all levels of the Chinese system appear to be banking on bullion for the long haul. The latest customs data released Tuesday showed China imported more gold last month than in nearly a year, despite bullion prices setting a new historic high of $3,500 per ounce in April. Market commentator Bill Holter warns that this more innovative approach in China would shake the entire global financial system. He mentioned they've got over 1 billion people, and now they're encouraging those people to buy gold. That doesn't look like aggression. It seems like regular citizens investing in something safe. Institutional flows into precious metals have accelerated dramatically in 2025. Central banks added 244 tons to global gold reserves in Q1 2025, while gold ETFs saw inflows of 226.5 tons during the same period, the strongest quarter since Q1 2022. This marks a significant reversal from outflows of 113 tons in Q1 2024. Physical investment demand remains robust, with gold bar and coin purchases totaling 325.4 tons in Q1, 3% higher than Q1 2024 and 15% above the 5-year quarterly average. China drove much of this increase, posting its second highest quarter ever for retail gold investment despite a 21% year-over-year decline in jewelry demand due to record high prices. For decades, global money supplies have been growing much faster than the global gold supply, which only increases by about 2% per year. No central bank has kept its money printing that low. Eventually, Holter believes investors will panic, flood into gold, and find insufficient physical metal available to meet demand. Let's jump into the video for more details. If you like what you see, please thumbs up and subscribe to our channel to stay updated with our latest content.
The COMEX and LBMA could be completely blown up with probably no more than $10 billion, which is not even pocket change in today's world. I mean, they could place $10 billion worth of orders into gold on the LBMA and the COMEX and demand delivery and completely blow those markets up. The inventories would be completely depleted and you'd have a failure to deliver. That would be an act of war. If China were to do that and blow these markets up, it blows up the entire system. It would be an act of war. So what did they do? They got 1 billion people. Now they're allowing that 1 billion people to buy gold. And, the demand's not going to be $10 billion right off the bat, but the demand is going to increase. And that is a way to blow up the Western financial system. And they can say, hey, we just bought what you were selling. This is not an act of war. This is, we're just letting our people buy gold because it looks to feel like the fiat currencies are not a good, safe place to store your capital. There's too much money out there, too much currency out there, and not enough gold. And there's going to be a moment where the markets get spooked, investors get spooked, and they flood into gold en masse, and the gold's not going to be there to deliver. And once there's a failure to deliver, that is outright well, let me just back up and say that if a contract cannot perform, the value of that contract is zero. And a failure to deliver will completely expose if you want to call it fractional reserve, if you want to call it Ponzi, whatever you want to call it, it's going to expose the fraudulent nature of the markets. They've got a debt problem. They're going to have to reflate, and they will reflate. But what does that do? I mean, that pushes the yuan down in value and pushes gold. All roads lead to gold when you're talking about money. And I mean, that will push the value of gold higher, and it will push the demand for gold higher, because the Chinese will be looking at their currency and saying, hey, wait a minute, I got to find a place to hide. Well, the the obvious and safest and most historical place to hide is into the gold market.
The U.S. debt market is entering wild waters from here on out. The ballooning debt, uncertainty on the income of tariffs, and other measures lagging in funding the spending bill make the U.S. debt a heavy burden for markets. This translates into a higher yield demanded for investors to be convinced to buy the issued debt, creating uncertainty that sends gold higher and might see more room to go. Gold has been the biggest beneficiary since the Moody's downgrade, as U.S. equities, the U.S. dollar, and treasuries have sold off. Bill Holter believes this collapse won't just hurt the U.S., it will hit every country that built its financial system on debt. Since the dollar is the world's reserve currency, central banks everywhere that hold dollars will suffer when its value collapses.
If there's any way you could flip that chart upside down, that's a better explanation. You're saying, gold is exploding. No, gold isn't doing anything. Gold hasn't changed. 1 ounce today, it was an ounce a year ago, it was an ounce 100 years ago, and it'll be an ounce a year or 100 years from now. What the inversion is telling you is that you're getting mass capital flight out of fiat currencies and into gold because the public, and when I say the public, I'm not talking about the US public, I'm talking about globally, the public is understanding the Keynesian / fiat experiment has failed and it's over, and we're moving into a new system, and that new system, gold is going to play a significant role. So what you've got is central banks all over the world replacing fiat currency, sovereign treasury bonds with gold. If you just look at the math, in 1971, gold was $35 an ounce officially. It was really traded at 42, but officially it was $35 an ounce. So at 3,500 gold, which we did hit a few weeks ago, that is an absolute full 99% drop in purchasing power. I don't believe it's going to be worse in the U.S. or worse in Europe or worse in Japan. The bottom line is this is going to hit all entities that have built their financial system / real economy upon debt. And because the dollar is the world's reserve currency, any central bank that owns dollars is going to see a big black smoking hole in their balance sheet when the dollar collapses in purchasing power. And it is happening already.
So it'd be every bank then?
Every central bank. Yeah, it's important to understand that if you go back to, what was it, 2001, 2002, where Dick Cheney said deficits don't matter. Well, they do matter. It's the problem is everything is carried with, you just drive through a city and you see stuff being built, you see big skyscrapers, those all have debt attached to them. They're not free and clear. And when you raise interest rates, it's like taking money out of the system. And the system is a Ponzi scheme, and any Ponzi scheme will collapse once there's no longer new investors, quote, or / new debt coming into the system. So this is a disaster waiting to happen. And let me just mention that when Dick Cheney said deficits don't matter, he understood that where interest rates were at the time, back around 2000, you were talking, 6-7%, or even slightly over 7%. Rates had the ability to drop dramatically. And what they did was they piled more and more debt on and lowered rates more and more, so that the debt service number didn't really budge. It traded for, 20 years between 350 billion to 500 billion per year. Now we're looking at 1.5 trillion. Now we're looking at triple that number. So finally, deficits do matter.
Currencies like the dollar are losing their purchasing power fast because the world is losing trust in the current financial system, which is built on debt and money that isn't backed by anything tangible. As people and central banks worldwide move their money into gold, it shows they're preparing for a new system where gold plays a bigger role. The current system works like a Ponzi scheme. It needs constant new debt to survive, and rising interest rates are exposing how fragile it is. As debt piles up and interest payments skyrocket, the entire setup becomes dangerously unstable, and a significant financial reset seems inevitable. Is our economic system sustainable, or is it a ticking time bomb? Share your feedback in the comments below. If you found this helpful video, hit the thumbs up and subscribe to keep up with our latest updates.